So my rule is very simple when I give workshops. At any point in time, if you have any questions or any comments, just raise your hand and say it out. Okay? But if it is too, if it's a distraction, it's not related to what we're talking about, or I'm going to address it in later slides, then I'll let you know. Hold on, I'll get to it later on. All right? But please, at any point in time, raise your hand and ask anything or say anything. Because if you don't, then usually you'll forget. Yeah? And then in the end, the question is not asked. All right? So we don't have to wait till the end. At any point in time, please interrupt. So, the crowdfunding opportunity, I will not read from the slides, but essentially, crowdfunding is an emerging model, and it is very different from the financial institutions that we know and that we participate in today. And the key difference is, of course, it's sometimes difficult to draw a line, but the key difference is crowdfunding platforms are not really financial institutions. Right? We are not. Crowdfunding platforms we are not fund managers, we don't manage your money. We are not banks, we don't keep and lend out your money. Right? We don't collect deposits. What crowdfunding does is it is just a platform that matches you, if you're a funder, if you're an investor or donor, to projects. Or the other way, if you have projects, you want to raise funds, then you go to a platform to get matched to funds. All right? Similar to e-commerce platforms, which matches buyers and sellers. Similar to Karim, which matches drivers with cars and those who want to ride. We are a platform that matches projects and money. Right? That is what, in essence, crowdfunding is about. Okay? And it sounds very simple. It is quite simple, the concept. Yeah? It's e-commerce or it's a platform for project financing. But when you think about it, especially those finance people or Sharia scholars, when you compare it to the existing financial system, this approach is radically different from what is happening in the financial world. Right? And this activity is actually an activity that has been ongoing since ancient times. People have always been pooling money together to invest or donate in projects, right? Since the start of humanity. The difference today is that we have the internet. And increasingly, we have more and more different internet technologies. So with the internet, we can match on a much wider scale. And with technology, we can lower the transaction cost. We can lower the barriers to entry, right? We can we can increase the accessibility so that you, if you're trying to raise funds, and depending on the platform, you can reach out immediately to thousands of people, right? Or if you want to invest, you have, at this point, thousands of platforms to look at. If you want to donate, similarly, you can go to a platform, and the big platforms, just one platform can have thousands of campaigns for you to choose from. All right? So that, in a nutshell, is what is described over here. Right? And I want to focus on the first paragraph in terms of the opportunity that we see, that I see. The opportunity is really in the emerging world. Okay, thank you. The opportunity is very much in the emerging world, where there are so many funding gaps, there's unserved and underserved segments of society, right, that banking cannot serve, that fund managers are not interested to serve, for example. And so these are the areas where crowdfunding has tremendous growth. Yeah? Okay, I'll touch more on this later on. So far, general concept. Of course, we'll go into detail. General concept. Anybody want to clarify or ask any questions? Please do so. Anything at all? No? All good? My explanation is very clear? Yeah? Go ahead, please.
There's a way, it's called muqayyada. You know muqayyada?
Nope.
When you have something, you don't need it, and you give it to the other person, he has something he don't need it. So
Exchanging of items, products.
Barter. Barter trade. Exchanging items. Okay.
Is this included in this system?
Okay. So the question I'll repeat is about barter trading, right? Exchanging something for something else or value.
Commodities exchange.
Yeah, maybe commodities, maybe any type of exchange. I mean, the nature of crowdfunding, if you want to be strict about it, is money flow. Money flowing to project, right? So it's about funding projects or funding businesses or funding campaigns, if you want to call it that. Yep, thank you.
Sorry, so when you say funding businesses or campaigns, this does not include personal lending?
It does and it can, and I'll touch on that, but it depends on regulations, it depends on the country. Yeah? Okay, good question again. Anything else, anyone? All good? Right. So before we go on to more details about crowdfunding, what are the problems that we face today, especially in the Muslim world, I would say, in many countries in the Muslim world? As I shared just now, our current financial service providers are not able to reach certain segments, especially the smaller businesses or the lower income individuals, right? And because of that, they serve mainly, okay, one very common joke about banking is, who do bankers give money to? Those who don't need money. Right? Okay, no offense to bankers here. They give it to those who don't need money because they are already stable, right? They're not going to give to those who really need money because they're not stable. That is the inherent nature of banking, right? You give those who are credit worthy, right? So with that, there's little social impact. Right? In general, of course I'm stereotyping, I'm generalizing, but in general, I think it's very true and observable that the social impact of Islamic banking is limited, and it should be much, much more. So crowdfunding has this ability and agility to reach those underserved and unserved. In theory and also in practice, we have seen it happen at various scales, yeah, in different pockets of the world, right? Now, so that's the first point. Second point is, outside of the financial system, informal financing, when you invest in your neighbor, your cousin, your friend, right? In general, it is usually poorly organized. There's a lack of transparency, information, clarity, lack of legal agreement. Sometimes is based on trust and based on relationship, right? But we all know, especially in Islamic finance, we are taught as well, there cannot be any gharar. It should be very clear and explicit to prevent disagreements. But if you look around you, in whichever country you're from, whichever community you're from, people who invest informally, more often than not, there are problems, right? Sometimes it's legitimate business challenges, but the communication or the updates are poor or not done, and then it becomes a quarrel, right? So this is a very big issue or problem, especially in the Muslim world. Now, I come from Singapore. I'm Singaporean. I'm living in Kuala Lumpur now. And while in my early days doing business, I did business with the Chinese in Singapore. And the Chinese have Chinese non-Muslim. They have a very, very solid system of supporting each other. Very solid. They will pool money. They have all the templates. They have all the approaches, and they're very strict on how it's done. They organize it very well. This is something they've been doing for decades, or maybe centuries, right? But in general, in our societies, we lack that. So inshallah, with crowdfunding, this can be a trigger or an avenue for us to have more organized and more effective informal funding to each other, right? And the last one is about global flows, right? Four of you, I think, have funded projects on crowdfunding platforms, right? How many of you, in general, have ever funded anything, investment or donation, in a country far away like Indonesia? Anyone? Invested in Indonesia? Yes? 1, 2?
Donated.
Huh? Donated. Okay, donated. Invested? A project there, okay. Alhamdulillah, yourself?
Building a mosque.
Building a mosque, charity, yeah? All right. And if you want to invest in Indonesia today, is it easy? If you have $10,000, you want to invest in Indonesia, you're going to spend all that money on the flight ticket and meeting people and everything, and then in the end you have no more money, that money is gone. Why Indonesia? I'll touch on it later on. It's a huge market and it's doing very well, but that's besides the point. The point is, if you want to invest overseas or internationally, it's very challenging. There's a lack of solid or proper credible information. There's a lack of facilitation. And today, especially in the Muslim world, there are various forms of controls and various forms of limitations that make it difficult sometimes for Muslims to fund projects in the Muslim world. There's the reality of the world today, right? So these are all problems that we believe Islamic crowdfunding can help to solve, okay? Right, so that's in a nutshell what we believe in. Islamic finance needs to evolve. And if you look at the conventional financial space or world, fintech in general, including crowdfunding or crowd investments, has really taken off, right? In the US, in the UK, in China, in Indonesia, these are the top crowdfunding markets. The top markets have done hundreds of billions in China and the US. Indonesia has done $10 billion through platforms. So, of course, that's the small percentage of the financial world, but we can see that it's becoming significant. Yeah? And the beauty of these new models that are enabled by technology is that you can think out of the box. You're not confined or restricted by, for example, the rigid banking system or regulations, right? A lot of the times when you speak to bankers or Islamic bankers, they say, we just cannot do this kind of deals. It doesn't fit into our mandate, it doesn't fit into our risk profile or criteria. Yeah? But when it comes to direct financing like crowdfunding, you can. In theory, you can do anything, right? So of course, the theory has to match reality, and I'll talk about some examples later on. Okay. So let's talk about the difference between crowdfunding and other forms of finance. So the first one here is who decides where money goes to. Of course, the platform has a role. The platform will onboard and feature projects that it believes has a market of funders, right? But you decide, basically, and that's very fundamental, right? You decide, the crowd decides what projects get funded and what projects don't. Previously, when you put in your money somewhere, when you put in your money in a financial institution, to a large extent, a bank, for example, you have no visibility and you have no influence about where the money goes. Of course, if you put money in a fund manager, you can dictate the mandate, but you need to be very wealthy to be able to do that, right? There's one question.
Before starting, there should be a Sharia board monitoring all the transaction, the investment and so on.
Yep.
This is just yes only.
Yes.
Sharia board.
Agreed.
Just you are talking about overseas.
Yes.
Okay, overseas. If we take Hadith Rasul or Sadaqah, it is for relatives more or the nearer.
Closer to you, yes.
Yeah, close. It is more than
Yep.
advanced. Okay, so because we have Sharia scholar here, is it allowed for non-Muslim who is in part of this world where countries are living in poorness and so on, and they have the ability to of course, through these systems, okay, to invest abroad.
Okay.
Are there any restriction from Sharia point of view?
For non-Muslims to participate.
For Muslims to participate abroad, overseas.
For charity.
Not for charity, only for because by analogy, if we talk by analogy.
Oh, I see.
Okay.
All right.
And compared to some. So
Okay.
investment overseas, wherever, whereas investment in your country it is more needed.
Sure. So I'll repeat the question. And Alhamdulillah, we have some Sharia advisors here who can help to answer. The question is, for charity, according to Hadith, yeah, you are supposed to donate to those closer to you first, right? Yeah, and maybe you can get the Sharia advisors to give some input on that. Like some countries, the scholars believe that you should give zakah to your country, right? Not to other countries. Some opinions are like that, I believe. And but in that context, he's asking about investment. Does the same principle apply, right? Yeah. So from a purely Sharia perspective, I don't have an answer. And I hope the Sharia advisors will share their point of view.
In the board of, I think it is out of context, so let's concentrate. We are not here to discuss this issue from Sharia point of view. Is it available for Sadaqah? So let's concentrate on our point, please.
Sure. No, but I think it's a valid question.
My question is not, I want fatwa, but I'm asking, is it taken by the board in consideration? That's it.
Oh, I see. Okay. Question is more about governance, about the board level. So in principle, okay, let me touch on the 2 points which are relevant. One is about Sharia endorsement or oversight. Of course, if you're claiming to be Islamic, there should be this component in your business. Some countries require it. You know, it's a requirement, like Malaysia, we need a third-party recognized Sharia advisor. In Indonesia as well. In some countries, there's no requirement. Yeah? But every company or every platform that claims to be Sharia compliant should at least have an internal Sharia advisor. That's my opinion. Yeah? And when it comes to investment, my understanding is you can invest anywhere. I don't think there's this issue of investing close to you or investing far. Right? Okay, if the Sharia advisors have any points to share? No? Yes?
It's allowed in Sharia that you invest with other countries, not only in your region.
All right, thank you. So yeah, in Sharia, there's no issue at all, inshallah, to invest in other countries. Yeah. Okay, second and third point, also important. So as a platform, what's our role? What's our value contribution? Right, as I said, is to match and everything. But if you go deeper, the criteria or the exact value we provide is these 3. Screening, it means we collect information, we verify information, and then we present the information, right? So that's related to transparency. Something to highlight that's very important is every platform does it differently. Some platforms do very, very thorough due diligence before they put it on the platform. Some platforms are very, very open source. Anybody, everyone from anywhere can upload a project, and they have a simple approval system, right? Without looking into the details. Yeah? So it can be very, very light touch platform, or it can be a very deep screening and verification and due diligence approach. Right? At the end of the day, it is also related to, as a platform, the reputation of the platform. Right? So and for us as a platform, maybe there's some of you interested to set up your own crowdfunding platform. There is a trade-off between the two that I want to highlight that's very important. If you are an open source platform, that means anybody can submit projects to you, and then they will push the project to their network, then you will grow much faster. Because you don't have to check every single project so much, right? But if you're very controlled, you screen and you validate and you do due diligence on every single project, then your growth will be slower because it's more controlled, right? But I believe the second approach is more sustainable, and at this point, because there's a lack of understanding by investors at the retail level, there's a duty of the platform, a moral duty, not a legal duty, a moral duty to do some checks for the investors instead of leaving it to the investor to decide, right?
I have one question.
Sure.
Regarding the due diligence and the KYC and the compliance especially, the World Bank basically introduced one new law for all financial institutions. You must do a due diligence through the KYC.
Yep.
Regarding the financial background, source of funding. But keenly, I have one question regarding your basically platform. Where you registered, under which security depository meter,
Okay.
how much the paid up capital?
Sure. Right. So questions about.
Yeah, what type of the transactions you are appreciate toward your platform?
Sure. So our own platform will be after this. They have a portion on that, so I'll talk about that later. And your answers, inshallah, will be answered at that point in time, right? Yep.
In fact, when you're talking about screening, it's a very complex issue. And you are
On what? Sorry, screening.
Screening.
Screening, yes.
Yeah. Whether we are screening individuals or screening projects in terms of feasibility
Yep.
or in terms of something else, I think it is a very complicated issue, and what the criteria will be in this case. You are going to satisfy whom? Is it the regulatory entities or yourself as a platform?
Sure. All right. So the question here is about screening. Screening is a complicated thing.
Yeah.
You know, every bank in the world is trying to figure out how to screen who should get money, right? So,
Depend on basically where you basically get a license. As per the license provider, they will give you the checklist for the screening.
no. So, okay, so these are related questions, right? So we're talking about screening now. As a platform, what do we do when projects come to us? So as I said, there's a big range of involvement. Some platforms are very involved, some platforms are not so involved. If it's investment, the government and every regulator is different. This space is moving and changing a lot. So the regulator will require certain things to be done, which is what you mentioned just now, all the KYC, the source of funds, the compliance mechanisms, having a trustee or a custodian and blah, blah, blah. These are regulatory requirements. But usually, the regulators don't interfere when it comes to the business side of things. So in essence, to simplify it, most platforms decide on their own how they're going to do it and what they're going to do. But that is part of our business plan submitted to the regulator. If the regulator is comfortable or confident, then they will approve it. All right? So let me give you one example. In the UK and in Singapore, there are very big platforms. One platform is called Cedars, and a few others like that allow you to invest in startups. And that's very risky, right? And they say, you know, as long as the idea is new, most of them, as long as the idea is new, and you show there's a market, we will put you on the platform, all right?
Like Goji and
Goji, I'm not sure about Goji. Yeah. So the screening, just to summarize and move on to the next slide, the screening is really up to the platform. The baseline, the minimum is you need to follow regulatory requirements. But as a platform, that is your business model. Is your business model very heavy on screening, or is your platform very light on screening and very open source? Let the market decide, right? Platforms who let the market decide, what they do is, usually they have a group of investors closer to them. So a startup will come and they say, I want to raise these funds. So they will open it up to the crowd. Is there interest? If there's interest, then they'll put it on the platform. If there's no interest, they won't put it on the platform. So in that way, they make the crowd decide, right? For us, our approach is more of understanding our crowd and then packaging it for our crowd. Right? So different platforms are different. All right. Now, I want to jump to the opportunities. Right? Where are the opportunities and where is the growth in crowdfunding? The first one is for the underserved, right? As I shared just now. The underserved today have few or no avenues, right? And of course, crowdfunding cannot serve everybody, but we have seen significant platforms doing it at significant scale. For example, in Indonesia, there are platforms doing microfinance, at this point still in the tens of millions and reaching 100 million, all right? But this is microfinance, right? Which before they didn't have many options, right? So that's the first one. Second one is the trends, as somebody asked just now. Consumer financing can be done in some countries, right? In Malaysia, we are licensed. We cannot do it. The regulators don't allow it. In Indonesia, where we have a license as well, you're allowed to lend money or to give Islamic financing to people, to individuals who want to buy stuff or do whatever they want, right? Now, consumer, there is a huge risk of exploitation. Most governments will set a maximum in terms of the rate or the profit rate or the interest rate you can charge, right? But sometimes when the government is slow to provide regulations, then people start charging very high rates, okay? I want to digress a little bit before I talk about zakat and wakaf. I want to digress a bit on the point of screening, which was mentioned just now. I'll give you one example. In Indonesia, there's a platform called Wang Teman. Wang Teman literally translates to friend money or friendly money. Okay, not so friendly, but they call it friendly money. When they started, before there were regulations, any Indonesian, this is from Indonesia, any Indonesian go online, submit his information, and you get money in your bank in 1 hour. Anyone. No collateral, no credit screening, nothing. Just put in your social media details, attach your login with Facebook or LinkedIn or whatever, and you get money in your bank in 1 hour. Right? Maximum was about $100, I think. Okay, but for low-income Indonesians, $100 is money, is significant money, right? And they charged, in the first year that they were operating, 2% a day. 2% a day is madness, right? It's super exploitative, 2% a day. Their default rates in their first year was 70%. I mean, free money, right? And you pay 2% a day, I'm not going to pay you. I just take the money and run away, right? I mean, not me, but a lot of people. That's what happened in the first year for this company, Wang Teman. But if you calculate, if you do your math, 2% a day on the 30% who borrowed money, they still make money, right? They still make money. So, and it's just short-term loans, 1 week, 2 weeks, 3 weeks kind of loans. Now, in the second year, regulations came in and they were forced to lower their percentages and everything, right? I think the maximum in Indonesia is 18%, if I'm not wrong, per annum. And in the second year, the default rates went down to 30%. And right now, it's single digit, 3 years later. So how did they do it, right? The key here for them is data. And the key here for any technology company today is data, which helps you to understand your customers, right? And the data, especially in the Muslim world, I believe is unique. There are a few companies today trying to process and understand data. Let me give you an idea of what I mean, right? So if you have a prayer app, right? Most of you have some form of prayer app. I think the most popular one globally is called Muslim Pro, right? Prayer app, Quran app, and so on. So if the app can check where you go, if you allow it to, the app can check where, what you do, whether you pray and whatnot, and there's even tracker of how many times I prayed, how many times did I miss any prayer, did I read my Quran today, and all that, right? So the app may show data, for example, people who go Jum'ah prayers are more credit worthy. For example, a guy who skips Jum'ah has a higher chance of not paying back, right? Maybe, right? Only data will tell. And sometimes data tells you crazy things that you wouldn't think of. Yeah? So this is the kind of so-called alternative credit screening that platforms do. Yeah? And data today, they say, is the new currency, is the new value. Right? So this is, I cannot go too much into this. I got to move on to other slides. But I just want you to think about that. Credit screening today, especially for fintechs, it's all about data. So the banks may reject you because on paper you have whatever, maybe not enough money, not enough savings, or you didn't pay your credit card on time or whatever. But a fintech will view you differently. You will have a different profile in their system. All right? Okay. Now, last point is about zakat, wakaf, and sedekah. I think this is a huge, huge problem for the Muslim world because our zakah and our sedekah and wakaf, of course, is not properly utilized and it's not effective. Right? Why do I say so? Some of you may know how much zakah goes around every year. Do you know? Any idea? Globally, whole Muslim world.
If people pay zakah exactly, we must have yearly $35 billion.
$35 billion, all right? 50? Right. According to the IDB, the IRT, Islamic Research Training Institution of the IDB, it is estimated to be between 500 billion to 1 trillion every year. All right?
Supposed to, or what do they pay?
IDB?
Yeah. This number.
Uh-huh.
Is it the
No, that is the amount that they say is moving every year.
moving, yeah.
Not supposed to, it's out.
Oh, yeah, that's fine.
Right? So let's just take 500 billion. It's a crazy number. $500 billion is supposedly moving every year. And that is just zakah. You're not talking about sedekah yet. Every Friday, all of us give, all the males will give money to the mosque. And of course, the females give money as well. So there's a lot of Muslim charitable funds moving. Yet we know that we are one of the poorest, religious groups in the world, right? 1/3, I think, of Muslims are in poverty, right? Across the world, right? So there's something wrong here. The numbers don't add up. If you look at the total amount of aid, right, aid money, right, from the World Bank and others, total amount of aid globally is a fraction of that 500 billion. Right? That means zakat alone can solve poverty, right? If we were to do it right. But obviously something is wrong somewhere. Okay? So I'm not saying crowdfunding can solve all these problems immediately, but it can help towards creating more transparency and accountability. Right? And you have the power to decide which platforms are doing a good job and which projects deserve your money. Right? Okay. Let's move on. So, what's the benefit for you if you are a crowdfunder, if you're a donor or investor? Firstly, usually the minimums are quite low, right? Some platforms allow you to invest $100, $10 even. Our platform, the minimum is about $700, right? And we invest in property. Okay, so the minimums are quite low. And again, depending on the platform, you have a variety of projects to choose from. You can diversify. You can create your own strategy, investing in 2-3 different platforms, all right? Secondly, as I mentioned just now, it can be large or small and diversify. And the last one is, it's easy to use, it's meant to be easy to use, and it's immediately international as well, all right? Okay, so these are the benefits for donors and investors. And for fundraisers, as I shared earlier, I'll reiterate, it's faster, okay? What we do, I'll share more later on, but what we do is we provide funds to developers, okay? And these developers can get funds from the banks. But why do they come to us? Because usually, from the time of application, fundraising, disbursement, it takes about 2 months, sometimes 3 months. In Indonesia, if you want to get the same funds from the bank, assuming there's banks with the capacity to do it, it takes about 9 months for you to get the money, right? Sorry?
9 months.
9 months. Yeah, about 9. In Indonesia, for property financing, it takes about 9 months.
Even though based on collateral also?
Sorry?
Even though based on collateral also?
Based on collateral, yeah. Based on collateral, right?
It will take 9 months.
9 months for you to get the money. It can be approved in 6 months, then you take wait 3 more months to get the money. So in many countries, it's faster. We take quite some time actually. Some platforms, they have systems that can approve you within 10 minutes or 1 hour, right? And then you get the money in your bank account, especially for consumer financing, all right? So faster and more flexible, right? More flexible because you now have more options and you can negotiate with the platform, and then you can come up with a proposal that you believe the crowd will be interested in, right? Okay. Second one is, if you are going to a platform to raise funds, immediately you have that base of potential investors who know about you. So that is your profile, your online profile. That is your validation of your business. That is your how you create awareness about your business. And the last one is leveraging on communities. There's a very interesting trend in the US right now called revenue sharing crowdfunding, right? Sharia scholars, I think, are not in agreement whether it's allowed or not. In Indonesia, they allow it. I think in AOF, they don't allow it. Revenue sharing, that means top line. Sales percentage given to the crowd, okay? How it's done very effectively in the US is, I have a restaurant, right? My machine is old, coffee machine is old. I want a bigger, better coffee machine. I need $10,000. So I do a crowdfunding campaign and I tell my customers, hey guys, I need to buy this thing. Go to this crowdfunding platform, invest in my business. Every month, 5% of my revenue will be given out to all of you for 2 years. Based on my history, you should get 50% more than your capital. Right? But if my business does badly, then you get less. If my business does very good, high revenue, you get more. Okay, revenue sharing. Right? Very easy to implement because it's top line. Whereas for musharaka or mudaraba, you have to do the profit actualization every month or every year and figure out what's the profit. Right? So this is how you leverage on communities. You have your own community, you want to raise funds, you can come to platforms and your community can support you instead of trying to do it yourself, which usually you cannot manage because you need legal, you need Sharia, you need investor relations, and all those things. Yeah?
Do you have a cap for the leverage?
Sorry?
Especially for you are going to share, like if you have some cap for leverage for the investment. returns?
Cap
Yeah.
for returns.
Some investment authority, they have some cap.
Okay. No, if you're lending to individuals, usually there's a cap. You cannot charge them too much. Yeah. But for investment crowdfunding, sometimes there's no limit. If you buy shares, you can increase 5, 10, 20 times. You know. Yeah. So it depends.
For individual, you have a cap.
Individual, most countries have a cap for financing of individuals. Yeah. Usually, I think it's 18% in many countries. Yeah.
18, 17, 16.
Yeah. It'll be sometimes less. Yeah. Okay. So the contrast is not good. You can't see the world map, but you can see the numbers. This is data from 2 years ago, so it's a bit outdated. There's no new data for most of them, but US now is about 200 billion. UK now is, I think, about 50 billion. Indonesia is 10 billion. Australia, I'm not sure. China is a very interesting case study. If you go Google China P2P financing, you will find that in China, it grew so fast. This was 2 years ago, 150 billion. The government did not regulate it properly because it just grew. You know, it just grew. Everybody is mobile. Everybody's using WeChat and Alipay, right? So platforms start coming in and start raising funds. And about 2 years ago, just after this data, it turned out that a few of the very big platforms were scams. Scams, right? They showed all the information that looked real, but it's not. Because the platform was the scammer, not the projects, right? And billions. Huh?
20% in UK platform is scam.
Maybe, I don't know about that, yeah. In China, billions of dollars was lost. So what the government did was they stepped in, they implemented very strict regulations. I think more than half of the market players could not comply with those regulations. They had to close down. And then there's a correction in the market, and now it's growing very fast again.
No, it's happened, I think, 1986.
Sorry?
China.
In China.
Yes.
This correction happened about 2 years ago. Maybe there was another one in the past. Yeah. Okay. So crowdfunding is not a magic solution that will solve everything. There's a lot of risk involved for investors, right? There's a lot of risk involved for the country. Yeah. So regulation is very important, right? And regulators have to try a fine balance between being flexible, and being strict. If you're too strict, it just doesn't work. If you're flexible, it gets abused. So they got to find a middle ground. Yeah. Okay. All right. Let me highlight two specific types of investment in crowdfunding. Charity is charity, right? Of course, you can have different types of charity. But the two types of investment crowdfunding that typically are regulated differently is peer-to-peer or debt-based or term-based or project-based financing. That means it's based on contract, right? The crowd is giving money to a project, and there's a contract. If it's conventional, usually it's just interest, right? Or revenue sharing, like I shared just now. If it's Islamic, you essentially can do any contract. You can do a musyarakah, you can do a mudarabah. Financial musyarakah, not actual joint venture. You can do ijara, you can do murabaha, you can do istisna. You can do almost anything as long as it's suitable for the project. Okay? Now, so that's peer-to-peer financing. And the growth, as I mentioned, is mostly in SMEs and loans to individuals, right? Now, equity crowdfunding is very interesting. This is where a small business can go for IPO, right? You can offer your shares to the public. You can raise funds by issuing shares to the public, like a big company going for listing. But here, for equity crowdfunding, is typically small or medium companies, all right? Like, for example, in Malaysia, we have a license for this. We have not started. We just got the license. Inshallah, in the next 1-2 months, we will start in Malaysia. The maximum is 5 million per issuance, right? You can do SPVs as well. Yeah, you can do SPVs, so it's very flexible. So 5 million ringgit is about the same currency as here in Qatar. Yeah, so that's the maximum you can raise. Yeah, but you can do, sometimes some countries allow multiple raises or SPVs. Right? You have one big company, you have some good small projects, you set up a company representing the project, and you raise funds at that project company. It's a special purpose vehicle. In the same way, in Malaysia, we can raise funds for foreign projects. So if there's a good project in Morocco, right, all you need to do, of course, I'm not saying it's so easy, but it can, in theory, be done. You set up a company in Malaysia that owns the Moroccan business or has rights to the Moroccan business, and you raise the funds in Malaysia in ringgit, that's something that can potentially be done as well.
Even under
SPV,
SPV.
yes.
So Malaysian government
Allows.
proceed the transaction.
Yep. Most equity crowdfunding regulations allow SPVs, from my understanding. Yeah.
You mentioned this is coming in a few months or already allowed?
Already allowed.
And your company can do it as of today?
Oh, our company is starting, inshallah, in 2 months' time in Malaysia.
Yes, sir.
What's the obstacle now? It's not the regulation, it's something else?
It's the regulation, yeah. There's a process. So we got a conditional license, and there's some go live requirement process, and then we can start. It's mostly right now stuck in, not stuck, it's just past the Sharia part.
Sorry, are you talking about the peer-to-peer or equity?
In Malaysia, for us, we do equity.
Okay.
Yeah. In Indonesia, we do peer-to-peer. Yeah, we have different licenses for my company.
Because in Malaysia, peer-to-peer is not regulated.
It is as well. It is as well, yeah. In Malaysia, you have both. In the UK, you have both. I can talk about the OIC. You can ask me about any country you want. I may not know all, but in the OIC, from what I understand so far, countries which have already regulations, Malaysia, very developed since 4 years ago, right? They have equity and they have P2P, total about 20 licenses. And they're probably not going to give any more or many more. In Indonesia, they started P2P 3 years ago. They're starting equity crowdfunding licenses. Just this year, they start giving out. So there's 3 equity licenses in Indonesia, and there's 150 P2P companies in Indonesia. The 10 billion comes from 150 companies, right? So that's in Southeast Asia. In the Middle East, you have Dubai has a few platforms that DFSA has approved. Bahrain, I think there's no company yet, but they have regulations. They allow it. Saudi just issued regulations, licenses, I think early this year or late last year. There's 2 or 3 platforms. Qatar, there's not yet. Yeah, but I had a few meetings and they are very open to it. So inshallah, maybe we will have something in Qatar for atheists. Yeah, they're quite welcoming so far. And Turkey has opened up for crowdfunding regulations last year. And I think Turkey allows for, the regulation is like across the board, including charity, if I'm not wrong. Yeah. It doesn't allow property, but it allows everything else for Turkey. And I think for the Muslim world, that's about it for now. Morocco is looking at regulations, right? So yeah, those are the Muslim countries. Countries like Pakistan are looking at it, I know, right? Pakistan is looking at it, but there's no regulation yet. Yeah.
When they opened the regulation last year in June.
Pakistan? Okay, because we asked them, they said there's none.
And also Turkey also allowed in, I think in August last year.
Last year, yes. Turkey is last year.
Now 100% to proceed as a platform.
Yep.
Invest money even doing the property also.
All right.
My question is SPV. You are giving the full 100% right to the investor for SPV if someone is own the SPV model.
Okay, what's the question?
You are giving the 100% ownership for SPV.
It depends. It can be 100%, it can be partial.
Partial.
Yep.
So if you give 100% ownership to the, like me, I am the investor, whatever the cap is there. So you allow me the 100% ownership, and what is your percentage on this one?
For us.
Yeah, fund manager.
Oh, so we are not a fund manager, so there will be usually a management company. Sometimes it's the parent or the main company.
Yes.
Yeah. Sometimes there is a third party manager. So it really depends on the deal.
Averagely, how much they will charge?
It depends. It really depends. Yeah. So as long as in the end the profits are sufficient to attract a market of investors, then it makes sense. If it's too expensive, investors won't come. Yeah. Okay. All right. Any questions, anyone, on the differences? The difference is this is contract based, this is financing based, this is equity based.
So for the personal lending side of the P2P, since there are no profits.
There are profits.
No, I mean, it's not a project that I'm going to generate revenues and profits.
Okay, sure.
I want to buy a car.
Yep.
What structures are applicable here?
Oh, in terms of Sharia?
Yes.
Yeah, I mean, in terms of Sharia, if you help people buy things, then of course you can do a murabaha. You can buy first and then you can sell it to them.
How about if I need something for healthcare?
I think there are structures out there. You may or may not agree with them. Especially in Malaysia, they're quite flexible with a concept called tawaruk, which a lot of the world does not like, but Malaysia allows it. So different countries have different way. It's just like when you look at Islamic banking, how they structure the financing, potentially you can do it on P2P as well.
There is now selling benefits like you need surgery,
Yep.
the bank or the financial side will buy this surgery from the hospital and then he will sell it for you.
All right. So that's how you can fund services.
Yes.
All right. So there's something very interesting I wasn't aware of. Banks can do that, and P2P can potentially do that as well.
تمويل المنافع.
Tamwil al
منافع.
manafa. Fa. Yeah. Benefit. Yeah. Manfaat.
Learning.
All right. Yeah. So that's just one approach.
What about debt consolidation?
Debt consolidation. What do you mean?
If I owe money for 5 credit cards
Yeah.
at different rates,
Yeah.
and I want to consolidate them under one loan,
Yeah.
is there a Sharia way of doing this?
I mean, I assume there's some way. Maybe you can answer that. But this is more of a Sharia question, and I just want to touch on it in the US.
We have a solution.
Yeah, there are Sharia solutions, so maybe not so much in the scope of today's presentation. But I want to share.
But debt consolidation falls under P2P lending, right?
Correct. Yeah. If you're lending money, it's P2P. So one of the biggest P2P platforms in the US, you can look it up, is SOFI, SOFI, which is short form for social finance. SOFI today does everything. They have lent billions, but they started by refinancing student debt because the US has a big student loan problem. Yeah.
It's an abbreviation for what?
Social finance. Yeah, Sophie.com. They are unicorn now. They are worth a few billion. I think 30 billion or 20 billion. They are very, very big today. Yep.
Excuse me.
Yes.
And in this case, how the platform itself can generate money from the both?
Yeah, important bonus question. How do platforms make money?
Yeah.
So of course, platforms will charge fees.
Yeah.
The fees can be on both sides or on one side, right? So for us, we charge a fee to the fundraiser. The property developer will pay us a fee, right? So it's a percentage of what we raise. In Indonesia, it's about 6%, right? Depending on the term of the project and the risk of the project and whatnot, it ranges from 4 to 6%. That's our fee as a platform.
And from P2P?
Same, yeah. Different platforms are different. The second fee some platforms charge is on the investor, right?
Revenue or capital investment?
Capital.
Capital investment.
Capital investment, yeah. So some platforms charge a fee to the investor. For us, we charge a percentage of your profit. A portion of it comes to us at the end of the project. Yeah, 12% of your profit comes to us.
From the profit or
12.
the capital itself?
Profit. So we raise 1 million for a project. We take 6%. Okay? Of the 1 million. Capital investment. Then 1 year later, the project finishes and 1.1 million is given back to you. 10% profit, right? So from the 100,000 profit, we take 12%. If there can be a loss, yeah, depending on the structure, but for us, usually we do istisna, so it's buying and selling of housing units. What's the question?
Suppose you invest on behalf of the investor, on behalf of the client,
Uh-huh.
1 million USD.
Okay.
But as per the liquidation, as per your term is mature after 1 year, after 5, whatever term is there.
Yep.
So the developer is not able to give you 1 million because of market crash.
Okay.
It happen as per the 10-20% investment risk is there.
Yep.
So in case of loss, so what happened with the investor money?
All right, good question. All right, the question is, in the event of project failure or whatever problems, what happens to the investor? The simple question is, whether it's Islamic or whether it's conventional crowdfunding P2P, you will lose money. Right? The simple answer is you'll lose money. Some platforms now start having insurance to cover capital. Yeah, so that's one avenue. There's no takaful solution for that right now. But in principle, you lose money. Okay, so when non-Muslims or Muslims who are okay with riba, I mean there are a lot of Muslims who also do conventional, and they come to us and they say, your rate or your profits is not fixed, your duration is not fixed, why should I go to you? I should go to the conventional which gives me a fixed profit, interest. I mean for those who don't think about Sharia. Fixed, so how do I compare the two? So we tell them, even in the conventional, they tell you you're going to get 10%, but if the business fails, you're not going to get anything, right? So in either way, you are participating in the actual business, right? It's just that here the profit mechanism is from the business. In conventional, the profit mechanism is not there; it's fixed. It's an interest. Yeah, but either way, your risk of default is the same, or similar.
No, what is the basically surety for the client?
There's no surety.
There's no surety.
Nope. You're investing in real-world projects. Some projects have collateral. Some projects have various different risk mitigation mechanisms. Like for us, when we do property, there's collateral. Collateral is 130% of the capital, right?
What type of security investor have?
Sorry?
Because investor is in the Qatar.
Yeah.
Today I did investment of $1.
Yes.
So investment in Indonesia, that's suppose the main developer or
Developer, yes.
you, as per the platform, your platform suggests to me this is the investment project is for you.
Yes.
You put your money there.
Correct.
And I put the money there. So what are the security I have?
All right. So as I said, every project, every platform is a bit different. I can share more about us. We have some slides on that later on, how we do it. But essentially, we have collateral. I'll share with you how we do it later on. Yeah? Okay. All right. So in terms of technical difference between the two, yeah?
It's allowed in Sharia that you can take percentage from the whole amount of money to keep it as for facing the any low
Yes.
So you can do this in your work.
Or we can keep a portion to protect capital.
Yeah.
Yes, I understand, yeah. We can have some form of sinking fund to protect capital, some form of internal takaful fund. Yeah, these are options that they can be considered. Yeah. Yep, thank you. Yes.
Don't you have, just related to what they say, there are some Sharia scholars who would argue that if you are rendering a service like this, the fee you take should not be with respect to the amount involved. And I heard you said you take 6% of the money raised.
Yep.
So it means that your fee, if I can term it that way, is related to the amount raised instead of with respect to the value of service or the extent of the cost we incurred.
Sure. Yeah. Okay. We got to move on, but I think this is one last question. Maybe it's a good question. He's saying that if you take a fixed fee, then it's like riba, basically, right? Now, for us, we're taking a fee. We're not the investor. It's not our capital. So it's pure fees. And fees, from my understanding, is not an issue. We can take a percentage. If you're investing, you cannot get a fixed percentage. We are providing a service of matching investors to the project. So we can get a fee. It's not a problem, inshallah. Yeah? Okay. All right. So how's P2P moving globally? This is some statistics. You can see the growth. This is in Indonesia. You can see it's grown like that. And in 2019, end of 2019, it went up to 6 billion. So it's through the roof, literally, right? So you can see this is the growth in a market where there's huge need and there is availability of capital. Unfortunately, like I said, a lot of it is consumer loans, where funds actually come from China using P2P to lend money. It's not really from the crowd. That is the reality of what's happening in Indonesia. So inshallah, Islamic crowdfunding is growing in Indonesia. Indonesia is the biggest market right now for Islamic-focused fintech. There's 60 fintechs doing Islamic finance in Indonesia. I can just share quickly. In Malaysia, there's about 10. In Dubai, there's about 10. And the rest of the world, there's maybe about 30 or 40. Right? So altogether, it's 100-something Islamic finance entrepreneurs trying to do new models. Yeah. Okay. Now, this is a little bit more detailed for those of you who are looking to invest in startups in this space. This is, I didn't put their names, but these are companies that raise funds in Malaysia, Singapore, and Indonesia. And you can see the first time they raise funds is 1 million, 3 million, 15 million for themselves. I'm talking about they raise funds for their own equity, for their own operations, not projects. All right? As a technology company, I need funds to grow. Yeah? So my point here is to show how 6 companies that raised money raised another round within 2 years, which shows that there's fast growth when you have capital supporting the business. And secondly, a lot of investors reinvested, right? And this is happening in Southeast Asia. I don't have data for the rest of the world. Okay. One point I want to share, which is very interesting, is you can see here in developed markets for crowdfunding, majority of the money in the US comes from institutions. So the crowd is not just all of us, it's big institutions as well. And Indonesia, I don't have the statistic here, but from my understanding, is about 80% of the 10 billion came from institutions. So why are institutions coming to crowdfunding platforms? And 3 years ago, crowdfunding volume surpassed, I think, number of deals of VCs, obviously, because a lot of small deals. But why are they doing it? Is because the platforms have two benefits, right? One benefit is deal origination. So many deals come to them. They are a magnet for deals. Once you're licensed, once you're regulated, everybody wants to raise funds with you, right? Whereas if you're a big investment management company, you don't have that outreach. Okay, so there's a lot of deal origination coming to you, and these investment managers or these institutions will fix their mandates and they will cherry pick what they want to invest in, right? And based on that mandate, the money will flow down. So for the institution, they get to diversify. Instead of $1 million going to one project, they can have $1 million going into 100 projects, which spreads out the risk for them. All right? So this is a phenomenon called a crowdfunding fund, where a fund is set up with LPs who are institutions to, based on their approved parameters or mandate, is automatically given to crowdfunding projects. Right? It's very interesting, and it's something we are starting to do right now in Malaysia, in Labuan. Right. So that is the end of the first half of our workshop, which focuses more on the theory, the basic general approach and understanding of crowdfunding. And the second half of our session is focused more on what we do